In the wake of Donald Trump's tax reform, tech giant Cisco has repatriated billions of dollars of overseas profit. I talked to CEO Chuck Robbins and asked him if that is a sign that those reforms have been a success.
I think that obviously getting our corporate tax rates down so that we're more competitive was something that was badly needed, and repatriation just made sense. I mean, giving companies access to their capital to put it to use in the United States made a lot of sense as well. So I think it has been a success, and I think it's a key contributor to why the U.S. economy has continued to be as strong as it is right now.
Some will note, though, that you may have put some of it to work. You put a lot of it to work in the form of buybacks and dividends, which benefits your investors, and I'm sure makes them happy and helps your stock price. But it doesn't really help the economy particularly. Is it fair to be critical of that?
Well, I think, first of all, we're not a capital-intensive business, so we spend about $1 billion a year in CapEx. So there's not a lot of other places for me to put it. But I do think that given the prevalence of our stock in retirement portfolios, assuming you have one, or in mutual funds, ETFs, index funds, I think that the dividends as well as the buyback certainly helps those people as well. But I think that other companies, for sure, who have capital-intensive businesses have put theirs to work in different ways, and I think all of those are positive for the economy. Some are just better understood than others. So
we did have that positive stimulus from tax reform. It's clearly showing up in the American economy. We have some negative friction, too, on the trade file. As a company with intense business in China and elsewhere, how worried are you about that side of the equation?
Well, I think that when all's said and done, I'm confident that we're going to get to a good place. The question is, how much pain do we endure getting from here to there? And I think my biggest concern is not the transactional trade issues between countries, because we deal with what we have to deal with. My bigger concern is, at what point does the uncertainty create pauses in spending and investment by my customers, and then correspondingly lead through to an impact on the overall economy? That's the bigger concern for it. And so far, the global economy has proven to be fairly resilient. So we'll see.
Is your business, as it transforms into the digital, into the cloud, is it more resilient in terms of the commitment by customers, software as service versus a physical device?
Well, I think that certainly customers who are buying technology as a service and in a subscription model, they tend to continue spending. If you're buying a one-time piece of capital equipment, then it's easy to pause those, and so to delay spending. So in the model we had for the last 30 years, we would always be an early indicator of economic shifts, because we would either see a slowdown or we'd see an uptick faster. And we still see those, because we haven't gotten a majority of our business transitioned yet. But I think it certainly creates more consistency. Absolutely.
How much of your legacy business creates stickiness for customers as you try to turn into a new model? Well,
a lot of what we have introduced that's allowed us to drive a subscription business on our, what you call legacy, our core networking franchises, actually is that subscription is a new architecture for the customers. So as they buy into that architecture, which is reflected in the subscription, it generally will lead them to buy more of our portfolio to fit within that architecture over time. So we're hopeful that it is sticky, primarily because we hope their customers are perceiving so much value out of the new technology that they want to continue to build into it. So,
how worried are you about being disrupted by upstarts? I mean, one of the amazing things about the biggest tech players is you all do seem to be managing a pivot. Historically, that has not been true. Incumbents do not win where the innovation game is concerned.
Well, I think the reason is that those who have made the shift, and we've had to some extent disrupt ourselves, or at least risk that, by transitioning our business model. But if you don't, then you have more risk, because competitors can see that you're not moving. And history is littered with big tech companies that don't exist, who have refused to look at real transitions going on in the marketplace. So I think that there's risk to making the transition, but there's a lot more risk to not making it. So the good news is we've made a lot of progress over the last 3 years, and we're beginning to see the success from that.